Good evening, my fellow Riz Elite members. This is Chris with Riz International, and this is your weekly market recap. And we are joined tonight by the man himself. Riz, how you doing, buddy?
Doing good. Yourself?
Man, it is a great day to be alive. Any day above ground is a good day, so I can't complain too much.
Absolutely.
Guys, all right, let's go ahead and get started. Let's take a look at the market, the S&P 500 here, and man, it looks like nothing is going to get in the way of the S&P 500 right now. I feel like every day we're mentioning on our channel, oh, we hit a new high. Oh, we hit a new high. You know, it was funny, because about a month ago, people were calling for a crash. And Riz, you mentioned this on Friday in the Discord channel. It's like, well, so much for that. So, what's your opinion here? I mean, how high can we go?
Yeah, I mean, this is looking very, very strong. Obviously, we've got a lot of momentum, as you can see from a couple of weeks back. And I think this can continue. We have earnings season starting up this week with the banks starting up. So the week after this is when we really get into full swing of earnings season. For what Q1 was like for these companies, and we're expecting, and analysts are expecting, predominantly solid results. In fact, last for Q4 2020. The results that came in, in January, when these companies last released, they pretty much 80% of companies beat estimates, but only about 45% saw prices increase post earnings. So that's a little bit of a stat there for you that you probably won't find anywhere else. And I find that to be quite interesting. What does that mean? That means that some of these companies, in fact, many, like I said, majority, 80%. Beat estimates. Granted, estimates were lowered, right, through the middle of last year, but they have been handily beaten. So that means even companies may have sort of, I would say, kind of settled the waters a bit too much and said, they might have kind of sold themselves a bit too short in saying that we may not have the best of the quarter, the best of the year in 2020, but in fact they, I would say, exceeded expectations, right? That's why they beat their estimates, whether it's CPS or revenues and so on and so forth. But only about 45% of those companies we saw had positive post-earnings release moves. And that means that, we can see a continuation of these great beat numbers in EPS and revenues. And hopefully this time, as a result of those releases, that stock prices actually do increase and follow through with the great results, right? So on the backdrop of that, with the stimulus have already gotten passed and given out, plus you factor in the future infrastructure spending plans of the Biden administration, that bodes relatively well. And I mentioned in the last webinar that the only kind of headwind I see for now is kind of that corporate tax rate, right? Corporate tax hike potentially to fund the infrastructure plans. So for now, I think this is looking great. GDP numbers are said to also be doing great as a recovery. Employment and payroll numbers are also are doing great and moving in the right direction.
You hit on something there that I want to touch on for a minute, because I think this is a common misconception in a lot of people who are just getting into the market and things like that. We're talking about earnings and earnings per share and things like that. And you mentioned that a lot of companies beat last earnings season, but yet the stock price went down. Why does that happen? Because, to the novice investor, like, well, they did better than they estimated the price should go up. Why does sometimes the price go down?
Yeah, so this can be for many reasons. In fact, this is something that takes a long time for even those intermediate traders to come to grips with, and because it makes no sense. Company does better. Okay, why doesn't the stock price also do better, which is go up? And this is a multifaceted reasoning behind this, because oftentimes you already have a company's price having already moved up significantly in the past. Not always, already moved up significantly leading up to earnings. So in a way, these great results potentially could be baked in. sometimes you see they beat the numbers, they beat the hard numbers, they beat the EPS estimates, right? They beat the revenue estimates, but maybe they provide color commentary, right? The CFO, CEO, whatever, and they say that, you know what, these are great, but they kind of settle down or sort of push down the kind of hype for the future, and that's known as guidance, right? They provide guidance that could be positive, but they provide muted guidance. They push it down a bit and say, you know what, we're being conservative. You know, maybe we might not have as great of a quarter as we did. So they kind of say these kind of things, and as a result, right, when investors consecutively and conclusively see this, maybe they end up taking some profits. Maybe, you know, they say this is pretty much baked in. So this is why you might see a stock price not move up, let alone it might move down after even what's known as a good or great quarter performance-wise, right? Metrics-wise. But this is something that takes time, you know, to wrap our head around. And in fact, I've said it before, I'll say it again, being able to predict or play earnings directionally, earnings releases and the results that may occur, and of course subsequently the price moves, is so difficult. In fact, I haven't met a single person who's able to do it consistently, right? So contrary to belief, earnings are a catalyst that are very hard to predict, and I mention it to my students and members that if you are unaware or unable to hold, I would say, or stick to your thesis or take that risk, then when it comes time to catalysts like earnings, it's best to just, you know, take the trade off or just wait on the sidelines.
Awesome. Thank you for that great explanation. I think that could really help a lot of people, because I know when I was starting, that just made no sense to me and it was very confusing. So thank you for going through that for us. All right, let's take a look here at the breakdown real quick on the S&P 500. I mean, not a whole lot has changed, but we have seen a bit of an uptick here in financials. And you were mentioning the banks releasing earnings here fairly soon over this week. I'd say generally things are about the same. I mean, energy is kind of consolidating at this point. Financials are taking a pickup. Tech is even coming up here. And real estate's holding about the same. Riz, is there anything here that you're seeing that you think is really interesting to talk about?
No, so, you know, pretty much similar to last week. I'm not surprised oil sector is a little bit down, with oil kind of consolidating and moving sideways, especially when I mentioned last week with OPEC agreeing to increase supply incrementally. I'm not surprised. Things mostly look, if I had to tilt, you know, a direction, provide a direction, I would say it's not like a straight line up, but a little bit of an arrow going slightly upwards, right? It's an uptrend. And I think this is easy to see, especially with the S&P 500 now up about 8.5% year to date, right? You know, of course, financials are doing better, real estate sector is doing better, and energy sector is doing better. With tech now kind of catching up, you know, we've seen tech, big tech at least, start heating up and doing well. You know, the Apple, Amazon, Microsoft, Google's, they've done well. They've clawed back a significant portion of that drop that happened in March, right? So not surprisingly, take a look at that XLK line where you're getting very close to the S&P 500 SPY line. And you know what? I wouldn't be surprised if tech, as you know, reopening, as the vaccine, and as we start moving past this COVID kind of stuff, along with getting into the summer months for North America, I think, you know, we can see a continuation of bullishness in pretty much every sector.
Awesome. Thank you for that explanation. Riz mentioned oil here. We're just going to kind of go through this fairly quickly, because honestly, if you saw last week's video and webinar, you'll know the answer to these questions already. Oil is just hanging tight right here around 60. Riz had called for 60 to be about the median price for oil. And, you know, that prediction has come true to this point right now. Oil really not doing a whole lot here over this week, and about the same can be said for gold. We do have somewhat of a double bottom formation here around the 1680 support level that we've seen in the past. It definitely bounced off there pretty hard, but really just kind of channelized here with gold. Not a whole lot going on, at least not what I'm seeing. Riz, is there anything that you want to point out here?
Nope, it looking good. I mean, last week I said, you know, we can continue. It looks like a double bottom, like you mentioned, a W sort of forming there, and it's right up at that what you have with that blue line there, 50-day moving average. And you know what, I'm not surprised. I think, we can kind of break past this 50-day moving average. And I said last week, and it still applies. If we break past the 50-day moving average above the 1745, 1750 area, that is a pretty bullish sign. I'm not saying it's going to go back to, 1900 or 2000 or anything like that, but it is a bullish sign for gold. If you do wish to play some, gold exposure, you can have some exposure via GLD if you want, which is the broader gold ETFs, or if you want to have exposure to some individual gold and metals mining companies, you could consider the ticker gold, which is Barrick Gold. And this is one of the larger gold mining companies in North America, right? So you can see they all have that similar kind of pattern, where it's that W double top kind of pattern there, whether it's GLD, gold. Another one that I also have traded in the past is Alamus Gold, AGI. But there, there's a dime a dozen, really. But just some thoughts, right? I'm not saying go out and buy these, but I'm just saying that if you ever did want to, track or kind of have a better idea how gold prices are doing, or have some exposure, these are a couple suggestions there for you.
Awesome. Thank you for that. Well, talking about suggestions, let's go ahead and go over the tickers that we're going to be keeping an eye on this week to kind of give you guys a little heads up on what's on our radar. And then I want to do something a little different. I want to go through our open trades that we have currently, but let's talk about what we're looking at this week. Riz, what's on your radar?
Yeah, I have two stocks. There's some more, but I picked kind of the two major candidates that I think are looking good. One is more of a riskier speculative play, and this is the Trade Desk, TTD. This is a big, more tech-based company, automated kind of marketing, advertisement kind of platform, and it's had a tremendous 2020. In fact, 2019 even. But right now it's supported and kind of held on to that 200-day moving average, that white line that Chris has there. And I think it has room to recover. I wouldn't feel comfortable carrying this to past, 750, 800 personally. But just based on a pure technical momentum trade, I think it looks good. It could continue, easily to that 50-day moving average, which is about 757, or even that 90-day moving average, which is near 799, 800. So keep an eye on this one. Again, just a suggestion, not saying that you have to get in or it's like, go Monday first thing at the open, you go and buy this, right? Please do your own due diligence. And then the second one that we've traded before is GSK. This shouldn't be a surprise what this is, GlaxoSmithKline. And this one is setting up a bit of a resistance, a multiple top, you see with that 3670 area. But the reason I'm saying to keep an eye on this is if it breaks above, it looks bullish as we continue to see some these large cap pharmaceutical companies beginning to recover. This could easily probably go to around the 38 level, right? So not big gains, but still, if you are looking for that technical kind of setup on a large cap solid company, this is one of those companies not going anywhere. It's a multinational, international, large pharmaceutical company.
Awesome. Well, thank you for that insight. We'll definitely want to keep an eye on those this week. If you're looking to get in, like Riz said, I want to reiterate, please do your due diligence. Don't just click that buy button with a market order the first thing Monday morning when the market opens at 9:30. Keep an eye on it. Make sure you are, keeping an eye on your risk and playing your setups. All right, now let's go ahead and talk about the open positions that we have right now in the fund to kind of give you guys a heads up on where we stand at the moment. So let's start with a ticker that we've talked about, I feel like, about every webinar here for the last 2-3 weeks, and that's PLTR. Obviously, a lot of news coming out on this one lately, but not a whole lot of movement. We got this big push here earlier in January, and it's been having a tough time. We're holding this in the fund still. I know I'm holding it in my personal account as well. Obviously, Riz, you still believe in this one pretty solid if we're still holding.
Yeah, still holding this. You know what? I think it's definitely looking better this week, leading into this week than last week. That's for sure. I wouldn't be surprised if we eventually get that kind of push forward I think it's just a matter of the stars kind of aligning, so to speak. But yeah, you know what? I don't mind carrying this. It's not going anywhere. The fact that it's held that 2021 level pretty solidly, I'm okay with. The trade for me personally, and for some of us, I know is in the red, but that's okay. I like what the company is doing. I like its future growth prospects, and I have no issues holding it.
Right on, absolutely. Speaking of solid companies, one name that you should be incredibly familiar with here in Riz Elite is AMD, Advanced Micro Devices. It is the CPU running my computer right now, and really, really solid chip company. Now, I know there was a lot of talk recently about issues with supply and demand on semiconductors and things like that. We got in this trade back in, looks like late February. We're still holding on to this one. Riz, what's your outlook on AMD? Is it looking, you think we're going to be okay? You think production's going to get ramped up and everything's going to be all right? Or, we're going to have to hold this longer?
Yeah, so this is a bit of a double-edged sword, right? When there's a shortage in the silicone and all that kind of stuff that they need, these wafers that they need to make these chipsets, which AMD makes. Well, the problem is they can't make as much that they need, and in fact, you mixed in the fact that a lot of people are also looking to get graphics cards not only for gaming and their PCs, but also for, of course, the crypto and the crypto mining wave that has started up again. This has led to a big short in supply. Sort of a big hole in supply there, which demand is completely encompassed, and as a result, these whatever these chipsets, processors that are out there are just flying off the shelf. And in fact, there's a back order, and people just can't get the amount of these that they want. So this is a good problem in one way, but a bad problem because, the revenues are kind of hamstrung for all these kinds of chipsets for the time being. Is this a permanent problem? No. But eventually that supply and demand will eventually balance out. We need to be more kind of aware of how they do during this earnings release that they're going to be releasing. I don't know exactly when, but I think it's somewhere next month. So we'll be waiting if that's an accurate thing. Sometimes TradingView has it a bit skewed, but if this is indeed the accurate earnings date, we have about a month till we kind of get that catalyst. And I think this is looking good. The fact that it's bounced up from that 76 area, I would not be surprised if we continue to lead go forward and upwards as we head into the next earnings.
Yeah, definitely. I mean, technically here, again, it's this W formation that we saw on gold as well. And, you kind of like seeing this here. Yeah, we did lose the 200, but we bounced off this solid support here right around 73.75. And the last trip down, it didn't make it as far as the last time. That's what we call making a lower high. So that's definitely a very good technical sign. So let's hope that this recovery continues. We can take profits sometime soon if you're still holding this one. All right. Perhaps the most fundamentally sound company on the S&P 500 and the one that holds the biggest market share would be Apple, AAPL. This one nicely in the green from where we entered at 123.90. An absolute all-star here on Apple. And man, Friday was a beautiful day for Apple, to say the least. Riz, are you planning on holding this through earnings, or are we planning on letting this go soon?
Yeah, I'm giving it a little bit of time. I'm not sure if I'm going to hold their earnings. I mean, analysts are saying they might hit a record device sales. So iPhone sales is cumulative. I think the total record in 2015 still remains. I think 237 million devices sold. So analysts are expecting that, I think they may do quite well this quarter as well. But remember, 237 million is, I think, the full year for 2015, right? So this start of the year, it's going to kind of set the tone for what we may expect for the rest of the year for Apple's device sales, right? So it could be a very, very great quarter, especially coming off the holiday quarter, which is their strongest. But you know what? The previous iPhone that released in September, October, whatever, seems to be a pretty good hit in terms of anecdotal evidence that I can speak to. I don't have the latest one, but people do like it. In fact, it all has to do with the upgrade cycles. And I think that one is one that people have really kind of pushed forward with. I don't know when it comes to the S model that's coming out or whatever they call it. But you know what? I think we can do great. I think 135 is the area that I'd be pretty happy to get out. And as you can see, we're getting there pretty quick. It
Oh
seems.
yeah.
So I don't see myself maybe carrying till earnings. I'm not looking to squeeze the last drop out of this thing. You know what? We've had a fantastic entry. We got the breakout that we wanted. And I think this is the kind of trade that we all kind of hope for, especially on these large caps and, pretty stress-free trade. And I think around 135, I'm maybe looking to either scale out or close completely.
Beautiful, beautiful guys. And yeah, Apple, a great company. And, I want to hit on something here that Riz was talking about. He was not talking about wanting to squeeze every last penny out of it, guys. I can tell you from my experience in trading, rarely do you ever bottom tick or top tick a stock, meaning rarely do you ever buy it at the absolute bottom and sell it at the absolute top. As a traders, we're looking to really just capture that, that big chunk like this in here. And it's okay if you sell it in here and then maybe it does something like this, and then you're like, oh, but Chris, I missed out on all that. Well, you still made this, bro, and you made it into you can take your money to the bank laughing and waving it at the stock market as you go. So don't kick yourself too much for just taking the meat of the move and be like, oh, I could have eked out another $5 per share. Well, you got 10. So it's nothing really to complain about. And I get it as a trader, but just remember, as long as you're making money, you're doing good.
Yeah, it all comes down to a plan. For me, after God knows how many hundreds of thousands of trades, when I make money, especially when it's a sleep easy at night kind of trade like this, like honestly, not a sweat, not a worry, when it comes to this. The fact that it's worked out beautifully is a bonus. And sure, maybe it goes past, $5 or $10 past our exit, but we can't tell the future. By that time, we may have already gotten into something else and made money on that, right? So this is the thing that people need to kind of plan and think forward. They need to do what we call reframing. They need to reframe their mindset. And as a result, accept everything that occurs, good and bad. Take complete ownership, right? And to me, I don't have any other way that I can think of things. It's like, for me, it comes easy, and I get it because it's been many years. But for some people, I can understand it takes some time and it's a bit harder. But for me, thinking of it in any other way besides we are in the here and now, and I don't care what could have happened, what did happen after the fact, right? I just can't think like that. It's just impossible for me to think like that anymore. I'm sure at some point it's when I was starting out, but I can't even remember those days. So, it's something that we need to keep in mind. We need to have a plan and sort of a thesis. And for me, as I can tell you, 135 area, maybe I take it off. I don't care where it goes next. It could go to the moon. It can go to hell. It doesn't matter.
Absolutely, guys. Absolutely. All right. So let's keep going here. Let's get through the rest of these. We got some Spotify here. If you're into that sort of thing. We've been holding this one for a little bit. Currently down just a couple dollars per share on this one. Seem to be running into some resistance here on the 200 simple moving average. Are you worried about this one at all, Riz, or do you think that this earnings may push this thing back where we want it?
Yeah, not worried. I'm hoping that, it can break past this. If we don't have to carry it through earnings, I'd rather not. I avoid, because it's a big tech stock, obviously had a great run last year. If I can get out with a profit, or even at the very least break even, which is very close to, I might just do so. I don't like carrying that kind of, risk through earnings, especially on something like this, where, it can move, $10, $20 a share overnight easily.
For sure. This one definitely can move. So keep an eye on it. Talking about a little bit of here of looking at the future here, we've got Teladoc. And so, remote health has obviously become very, very the talk of the town, to say the least. And, everybody seems to be telecommuting and things like that. TDoc here took a big hit on earnings. And I mean, this was the classic buy the dip play. It hasn't kind of worked out for us yet. We're still hanging on to this one. We've been holding on to it for about a month so far. How are you feeling on this one, Riz? Are you worried about this at all? I mean, obviously we're way below the moving averages at this point, and it's kind of consolidating.
No, I'm not worried. It's moving sideways. It's in a good secular, in a good sector. It's a good industry. Am I saying that, you know what, if it does happen to puke, below maybe around 175 or so, then I might have to reevaluate, eat the loss, and move on, right? Because I don't need to marry this thing. But on the flip side, where it is right now, I'm okay holding it. As you can see, it's been kind of moving sideways over the last few weeks, or especially the last week. So it's a good and a bad thing. The good thing is that it's holding this area, this kind of support area. Bad thing is, of course, that it hasn't breaking out and move up significantly. But I'm still holding, still carrying. I like to give my trade some time, especially with that kind of whipsaw and volatility that we had in March. So I'm hoping, this thing can turn the tide. Not too big a deal. And you know what? Let's kind of remain optimistic, but also making sure that we can manage our risk. If it's drops lower, so be it. You know what? I take it out. I'm not going to be bag holding it. This is not something that I want to bag hold, even though it's in the right sector. I just don't feel confident as this being one of those like amazingly fundamentally solid type of companies, because although it's in the right sector, it's a growth stock, and it's not that big of a sleep easy at night type of company that you want to hold for forever.
Speaking of a company you have no problem holding forever, let's take a look at Eli Lilly and Company. Obviously, an incredibly solid pharmaceutical company. I used to do contract work with them. It was our primary contract. So I'm well aware of how much work they do and how much they outsource. And so earnings coming up here, obviously a decent dividend if you don't have a problem holding this longer term. We're down a tiny, tiny bit. It's less than 2% at this point. We've been holding for about 2 weeks. What are you seeing here, Riz? Obviously, we took a bit of a beating here, and we've held, and we're consolidating. Are we expecting this to bounce back here fairly soon?
Yeah, so we entered after that drop, right? So
Mm-hmm.
this stock, the fact that it's holding this area, it seems good. This was more of a take the opportunity kind of moment, and try and catch that kind of knife, so to speak. But it's not really a knife considering that it's been holding, not moving up too much, but at least it's holding. So that just tells us that, our thesis is still in check. Our risk management and position sizing is good. Then it's not a problem to carry, because something like Eli Lilly is one of those stocks that you can sleep easy with. And you know what? If it goes lower to 170, I have no problem averaging in. That's not saying that other people should, but for me, I always have a reserve for things like this, where if I don't get the exact entry, I don't get the right entry, it does move against me. And if it is a fantastic company and I have the capital to deploy, which I usually always do, then I'm, in this case, might just average in. If it doesn't, maybe, it starts picking up, goes to 190. I'll consider, do I want to get in, depending on what's happening with the market, depending on what's happening with the individual stock itself. At that point, I may consider getting in on momentum, adding some more. If not, if I see it trickling slowly, it's not a strong bullish move on a daily candle, I might just leave the position I have now. And then at some point around, 195, 200, consider maybe getting out. If I'm feeling super frisky, maybe see if I can take it up to that previous resistance area of that 210.
It's always good when Riz is feeling frisky, guys. Let me tell you, that's always good. You gotta be feeling good when he says that. All right, PayPal obviously has been around for a while, making a great move here, nicely in the green on this one. We've only been holding this one 10 days so far, so this is about a perfect example of a buy the dip play that works in your favor as much as I can. This has been pretty much pain free the entire time.
Yes, it's another great one, and I can't blame anyone for taking it off around the 260, 265 mark, but I continue to hold because this is that continuation of a momentum play, a recovery that I felt was a bit, it was a drop too far, too fast, and I felt that, this has concern for moving up further, especially with the kind of world and we are in, and with earnings coming up, I think they should do quite well. Again, if I find that I'm making a good chunk of money leading up to the next week or two, I may just take it off, whether it's at 270, 280, doesn't really matter. To me, I've given it about enough time, and the fact that the trade's working well, that's great. If I find that it's losing steam, starts to curl over a bit, then I know that's it. You know what? It's giving me a sign. I'm out, right? Make my money. I'm out.
Absolutely. And then final one, guys, then we can start taking questions. is going to be Qcom. We talked about this one in last webinar, if I'm not mistaken. And we went ahead and took this one. This one doing pretty well also. Not up a whole lot just yet, but still in the green. Looking pretty good here, holding this 50 moving average very nicely. And, being able, let me zoom in a little bit so you guys can see that a little better. So, made this nice bounce off the 200, defeated the 50, and it's been kind of bouncing off there so far. So, I mean, this one I think is looking really good as well.
Yeah, this one's looking good. The fact that it's consolidating, hasn't just puked back down. Some people could say maybe this is going to be looking like a cup and handle type of thing. That's a bullish type of pattern. I'm not too much of a pattern trader, but there are some that are a little bit more prevalent than some absurd ones. And you know what? I think I like the way it's looking. I'm still in it, and I think we took this maybe a week or so ago, Chris.
Yeah, 6 days.
Yeah, so you know what? I'm completely okay with giving it a bit more time. It's right around that short-term kind of movement, resistance, I should say, sorry. And Chris has drawn us a beautiful cup, and that handle there, along with the steam coming from maybe that tea or coffee, whatever it may be. But yes, this is looking good. If it runs around 145, 150 in the next week or so, I might just take it off before earnings. Like I said, I just prefer taking the money, not having to keep my neck out there a bit too long.
Absolutely. Man, when the cup is steaming, it's hot, guys. So you got to go for it. Just kidding. But no, we don't trade cup and handles, guys. But Riz mentioned it. I couldn't resist. I always take a good opportunity to draw on a chart. So guys, I want you to go ahead and post up your questions. What do you guys want to talk about? What's on your mind? Is there anything you want us to take a look at? Please, this is your chance to hear it from Riz. If you've got something brewing that you want to hey, do you like this setup? Do you like this stock? Where are you at on this? Now's the time. I see people chiming in the chat. That's fantastic. I'm liking V. V for Vendetta or Visa? Oh, Visa. Okay. Yeah. Visa making a pretty solid move here. Riz, what are your thoughts?
Yeah, this is a pure momentum play. In fact, it's funny you mentioned it because right around where it hit 210, 208 area, I thought to myself, maybe I want to get in. And I was like, I don't know, I already have a few trades open. I'm not going to do it. And you know what? Here we are. So you know what? The point I'm making is that it doesn't matter. We all miss moves. We all see things we should have taken, we shouldn't take, and vice versa. So we take things we shouldn't have taken either. So you know what? I think in your view that I do like it, but personally, if I have to be very critical, I personally think the move is done. If you're in, like you said, you're in at 214, fantastic. Okay,
that's a great entry.
That's fantastic. Ride it up, see if you can get to around 224, 225. Getting very close. And then, you know what? Maybe see if it breaks out. If it does, great. If it doesn't, take that baby off, right? So, fantastic trade. Again, it's not something I would enter now, but the fact that you're already in, that's great. But yes, great company, great stock.
Are we still holding Walmart? No. We got out of Walmart about a little while ago. At least a couple of days, if memory serves. And then second question, what about a technical play on BYND? Well, BYND is completely fake meat. So I don't know how much technical we can look at. It looks like a technical piece of junk. This is a pretty solid downtrend. I don't know if I would be looking to take this long just yet.
Yeah, I agree with Chris. Just wait it out for a bit. Something that I looked at today too. It's funny you mentioned it because I did also see it just recently today. But I would just wait. I would wait. See if it can break past that 135, 140. You're better off getting a better entry. And even if you're a little bit late, right, getting an entry that has momentum, even if you didn't get it right now, right? If you get it at 140, obviously in hindsight, you're thinking I should have gotten at 130. But at 140, you could have a lot more momentum. You could have a lot more bullishness. So you could have more technicals on your side. And as a result, your entry, I would argue, is more safer, right? It's not guaranteed but it's more safer. So whereas if you enter now, especially on Friday's candle, I don't know, what if it goes to around 125 instead, right? So you're better off waiting. You're better off kind of just watching this thing. The moment some bullishness, some momentum comes in, because this thing moves on momentum. Once it gets a good news or some kind of, contract or one of their burgers or one of their meats are being distribute it to some retail restaurant or the other, that then it could just push up. But the fact that it's had some contracts with McDonald's and some other things, and it's still languishing, leads me to believe that maybe this isn't that great of an entry just yet. Like what Chris said, this downtrend. So I would keep an eye on this instead of just looking to get in just yet.
Yeah, I mean, the tricky part on these, like we were talking about earlier, you don't have to buy it on the absolute bottom and sell it on the absolute top. Let's wait for confirmation, because if you buy it now and it continues to dump, well, you're just stuck holding the bag at that point, or you got to eat the loss, one of the two. So yeah, I would, on this one, I agree with Riz 100%. Let's chill on this and just keep an eye on it. Can you take a quick look at plan? Well, that's definitely the plan. We will take a look at this. Let's see here. I'm not too familiar with Anaplan. Okay, so this is insurance, if I'm not mistaken.
Yeah, so I've traded it sometime before. I don't know the fundamentals, so don't quote me or hold my word as gospel. But just solely on a technical standpoint, I think this is looking good. This is something I like. Sure, you could make a case for being the 50 area a better entry, but if you do take an entry now, make sure that you have some kind of I would say constraint in place where if it breaks below 55, you get out. Because again, that's just me. I don't know too much about the fundamentals of this company, so my conviction in it is not or may not be as strong as yours, right? The person that's asking the question is who I'm speaking to. So with that said, for something like this, maybe have like a mental area where you want to get out if it doesn't continue to go up. But so far, this is looking good. If it can break that 60 area, especially that 200-day moving average, which is around 68, $60.68. If it breaks out, it can continue.
I agree 100%. Now, this is a good question from Jose. What are your thoughts on cruises? They've been on hold since they've been stopped till late this year. They've moved back a bit from their early year run. Hold through with Norwegian and Royal, or refocus that money?
Yeah, so let's bring up CCL or RCL, I should say. Sorry, RCL. Let's bring up RCL. I think this is a better one to look at. They all usually move in tandem anyways. This is one of the big ones. So yes, cruise lines are one of the big benefactors of reopening. I think it is looking good for a continuation play on something like RCL. And if really comes down to your belief in the trade. For me, I personally don't have a position, not really looking to touch these yet. Personally, okay. Sure, they could reopen, but a lot of them are still kind of in limbo. They've hemorrhaged a lot of cash. They may need to do some share offerings, right? So they have had a great recovery. If you take a look at the low of about $20 on this thing, right? So it's had a great recovery from the lows. Even in 2021, it's recovered since the beginning of this year. So from around, I think maybe $65, $70 or so, and now nearly 90. So it's already had a good recovery. So you can see the market's pretty bullish on these kind of things. And for all things, we all know that it could very well continue and do better, because there's a lot of bookings that are happening for cruise lines in the near future. All things considered, I think it's bullish. Again, if you have the time frame, you have that thesis there, I think it's a good entry. Just not something I would personally take at levels, because for me, I find I prefer to gravitate towards things that are already doing well and are not tied to some reopening catalyst.
For sure. But yeah, that's quite the recovery since here in 2020. That's a heck of a move in a year. That's very impressive, to say the least. Okay. What are your thoughts on SFIX, Riz?
So I've traded this one a couple years back. I don't like the valuation on this thing. Personally, I think, someone could make a case for that, but I don't really feel like it's justified. But on a technical standpoint, yes, it's looking good for recovery after a big drop, right? After a big drop. It did have a crazy run in the beginning of the year, right? From around about $60, went all the way past 100, 110, maybe. Man, what a rally. The fact that it's dropped back down to the nearly beginning of 2021 levels doesn't mean that it's a, oh my God, it's a deal, because it was overdone anyways. But ultimately, on a technical standpoint, sure, if it can continue, I think this is looking good. Just make sure you have like a stop, mental or hard, around that that kind of moving average, that around $45 area, because this is not something I want to bag hold at all.
I said that somewhat sarcastically because I knew that Riz had traded this before and he wasn't a huge fan of the stock. So I hope you all got my humor there. So yeah, I have to agree. Really nice bounce off the 200 simple moving average here, but coming up to around this 55 area, it does look a little dicey. So make sure it can push through that. If it doesn't, I would let go. Even if you only made, a little bit, just take the money and run when you're trading something like this. All right. Any other questions? Or I think we got them all. We've been on here for about 45 minutes. And Riz, I want to thank you for coming on. As always, it's always awesome to have you here and, get your insights on everything. It's always very appreciated. And it's always a blessing just to have you on and, be able to interact with everybody. And thank you, everybody who's here on the webinar tonight, who makes the time to come to these recordings and, to these live webinars. You guys reap the benefits of this, and this is something that you're not going to see anywhere else. And so I'm really glad that, we've been able to grow this thing. We've been getting more and more people, because I remember when I started doing the webinars and there was like one person here. So this is fantastic. I love it.
Yeah, no, it's awesome. I appreciate that, Chris. It's always great to be a part of the community and do what I do and I'm passionate about. So of course, I reciprocate that. Again, thank you for everyone. We thank everyone every time we're on, and it's absolutely justified for people to, put their time, effort, money, energy, and of course they deserve to be commended. But with that said, it's been awesome. I appreciate that. Have a great rest of the weekend, everyone, and we'll see how the rest of the week goes.
Awesome. As always, guys, we will see you in Discord on Monday. Have a great weekend, and we'll see everybody later. Good night, everybody.